Welcome back to Imperial Wealth's Crypto Chronicle Podcast, where we're recording a history book of all the events that have happened in the cryptocurrency industry. We're going to be reporting to you on a weekly basis, so let's head live over to our team right now to discuss all things that have happened in cryptocurrency this week.
Welcome back to the Imperial Wealth Crypto Chronicle Podcast. We are on the 6th of February 2024, roughly 2 to 3 months out from the halving, just post ETF.
11 weeks. It is coming.
11 weeks, that's right, Taylor. So we've got Taylor here and Mitchell, your usual buffoons.
Bandits, yeah.
Bandits,
like
buffoon,
buffoons.
yeah.
It's close enough.
Yeah, either or. We both went for the B word.
Yeah.
Here to just discuss the rundown since last Thursday. In all honesty, it's probably going to be a quick podcast because there hasn't actually really been a heap that's happened since we last touched base with you Thursday, particularly in terms of price action.
It's pretty much exactly the same.
Yeah, but thought we'd quickly run down the little pieces of news that have happened. We'll do a quick brief overview of the market, our services and miners, and then we'll let you go. But in saying that, of course, at the Crypto Chronicle Podcast, Taylor, we always start off with some Spot Bitcoin ETF news, don't we?
What else would we talk about?
Yeah, exactly. Well, I don't think we'd have jobs without these ETFs.
Well, I didn't think we would. No.
Yeah. So the South Korean regulator has actually decided to plan to talk to Gary Gensler, the SEC chief, about the Spot Bitcoin ETFs. Now, I'm unsure whether he's the right man to really get an opinion on, but anyways, they're going to... Huh?
Who would go to him?
I don't know. But they want to discuss digital assets and the impact of the SEC's recent approval of the 11 spot Bitcoin ETFs. So the FFS, which is the South Korean regulator, essentially wants to aim to review and update their own regulations around spot Bitcoin ETFs because they are a key cryptocurrency market regulator in the Asia-Pacific region. So it'll be interesting to see if they do the flow-on effect in other Asian countries.
It's just, I don't understand what context the US economy is going to be able to give to the South Korean economy.
Yeah.
Like economy scale-wise, it's like...
Yeah, you're probably right.
It's like Laos going to the US. How do you help us?
Somewhat South Korea big in tech. Like we've got
big in tech,
Samsung,
but I don't know. Be interesting.
Yeah, it will be interesting. But we'll see what happens there. A bit of a watch this space. Because obviously, I think last week or the week before, we've mentioned a few times how Hong Kong are trying to dip their toes. So,
could be a flow-on effect.
Really, to me, crypto liquidity is broken up into Asia and US. The rest makes up the last little percentage numbers.
Yeah.
So, I mean, it does somewhat... I understand the economy is a scale thing, but if you do it as Asia versus the US, it makes more sense. So, it'll be cool to see if South Korea and Hong Kong and these countries, if they do approve them, if a lot of liquidity does get built up in them, because I think there's always been a Europe spot ETF. It's just no one in Europe cares about Bitcoin.
Yeah, exactly. Yeah, it's really small there, isn't it?
So, there's no volume in that. And that's been around for a few years. You know what I mean? So people, some arguments against the US one was like, well, you've had one the whole time in Europe you could have invested in, but no one has.
Literally.
But anyways, good news there. Moving on to our second favourite man behind Gary Gensler at Imperial Wealth is the great Jebediah Powell, as the Trading Academy members know through my various shit posting on Jerome Powell as the Federal Reserve Chair. But he's come out recently in a 60 Minutes interview, funnily enough.
I forgot that show existed.
Well, he's a bit of a star in front of the camera, Jerome. I think he loves the sound of his own voice, a bit like Gary in those... in Congress, when he's speaking, and he tends to look like he's loving what he's doing, but he's making a fool of himself.
What's the odds of actually one of them going on to do a similar segment as Jim Cramer?
Very, very high. Yeah. So anyways, he's essentially gone on 60 Minutes and said, apparently what everyone else has known for about a decade is that they've got a bet dirt and amid a rising debt burden in the United States. And essentially he's just said they're on an unsustainable fiscal path.
What does that tell you? To me, when he says that, the only thing that comes to my head is brrr.
Yeah. Well, that's the funny thing is what they're $33 to $34 trillion in debt now. The way America fixes its problems is by printing more and accumulating more debt. Because what the hell is debt anyway? Who they owe that debt to?
Yeah. He's going to come collect it.
Yeah, exactly. So, yeah, I mean, it's a very interesting incoming months for macro. I think obviously the biggest point around Jerome and the Federal Reserve in the States is cuts versus interest rates remaining high. Obviously, at the moment, we just had FOMC that passed late last week. They continued their pause, which has been 3 or 4 meetings in a row now, I think.
Which there's got to be some change coming.
Yeah,
like obviously the pause is not having a positive effect.
So to explain the DXY quickly from a technical standpoint is, late last year we saw it go from about 104 down to 100, as low as 100.
Yeah.
And what that was people selling off the USD in anticipation of March rate cuts.
Yep.
So what happened was initially last year, the March rate cuts were very high in probability. We're talking 80, 90%. So everyone's going, well, they're going to cut rates. I'm not holding cash anymore. I want to put it in tech stocks, in stocks, blah, blah. NASDAQ made ads, blah, blah, blah. But then what's happened is they've come out in the December and then the January FOMC meetings and said, we're going to hold rates and we're actually probably most likely not going to cut until mid-year. So then everyone's started buying the USD.
So have we seen reversals?
Well, we haven't. Sorry about that. We haven't seen, funnily enough, any reversals in the inverse markets. So Bitcoin hasn't crashed per se. Nasdaq and S&P 500 are still at aths. So, I was explaining to a client yesterday and the day before that yes, there is a prevalent inverse relationship between the USD and commodity and stock markets. From the most point, you don't just assume, well, every time the DXY goes up, the stock markets go down. And
that correlation's really tapered off. It was pretty strong 2022.
Very definitely. Yeah.
And now it's like almost non-existent from what I can see.
Well, I think it's just the analysis and interpretation of the macroeconomics. People kind of know that we're still going to pump, almost know there's a crash on the end of it. So it's kind of, what I mean? It's just like people kind of doing their own thing despite what's in front of them.
Well, I guess throughout 2022, 23, everyone's looking for something that's causing Bitcoin to go down and the DXY.
Yeah, exactly. And really all you have to do is look at the cycles and you won't send yourself crazy. But anyways, obviously they're going to have to re-meet in March. I think, once again, what people need to understand is you can have theses on liquidity coming into the market, on when a rate cut is going to happen, but it's all based on data that no one knows and it gets released at a later point. So I could be planning for a bottom at the start of March that was based off what Jerome had said in December and what inflation was then and what the DXY was then. A month later, that can all completely change.
Well, that's the thing, it's a laggy indicator.
Yeah, exactly. Based on their strategic movements. And really, it is kind of crook that most of us do trade and invest based off one man's language and how he speaks. But anyways, that's a conversation for another time. Because Jebediah is my hero. Anyways, moving on to...
Oh, sorry. One topic on that.
Yeah.
Does that mean we see... as are we looking at what June, July looks like? Have they started to sort of see?
I think so. Settle? I think it's really hard thing to interpret right now, and I'm not going to give my full 2 cents on it because typically rate cuts are bullish for risk on assets such as tech stocks, NASDAQ, Bitcoin, but rate cuts in the current macro environment we're in may not be great for the economy and we may crash and burn and there could be a deflationary bust, and these are all different conversations, all different things you have to weigh up. And I think last year it was a hot topic on this podcast was discussing that the hardest thing to do is to have your mind completely within macro and try and analyze that and go, okay, I need to invest in crypto based on that, whilst at the same time trying to invest based on the cycles.
Yeah, exactly. Yeah.
Because if you're trying to forecast, you go, oh, well, we've got rate cuts in July and it might mean crash by the end of it, but the halvings in towards the middle. So it's kind of hard.
Yeah, exactly. Yeah. What do you reckon if we did have a hike?
Or a cut?
What if they hiked it by 0.25 as they weren't seeing what they were like? And
because...
I don't see it as hugely probable.
No, I don't, because you said it before. 2022, they were getting hiked, the rates, but 2023, they got hiked. We haven't had a single... They got hiked and they got paused.
Yeah.
The stock markets and Bitcoin rallied the entire time we were getting hiked. Well, I know that crashed, but they also rallied. People don't understand history and the historical fractals is that usually when there's a cut, more often than not, that's when we crash. Not the other way around, that when rates rise. And the thing is, you also can't compare eras. So I can't compare 2008 to now, and I can't compare 1990 and blah, blah. So anyways, that's exactly why we have experts here to run you through all of this analysis on the DXY and the stock markets and Bitcoin and help it break it down in simple language for you. But huge conversation, probably one that...
But that's kind of a good point, I guess, as well to reference in. Like if you're sitting there and not really knowing what to do over the next sort of 3, 6, 12, 18 months, whatever it is, that's kind of why you need us.
Yeah.
So reach out.
Exactly. Reach out if this is something...
Have a chat.
Yeah. Because even, you've got the analysis and the fundamental and technical updates sent to you all week. And I think, you made a really good point about it to Gareth, shout out Gareth, who is a new member of the Trading Academy as of half an hour ago. But you made the good point, some people are in the Trading Academy just for the tips, which is completely fine because, they want to make some money, they want to hodl, they want to buy at the lows, sell at the highs. Other people love being in the Trading Academy because of the analysis. Taylor himself, he DCAs and buys based off the analysis. He doesn't just purely follow the tips and blah, blah, blah. He buys on his own accord, interprets the analysis himself, puts it with his own analysis even, and then makes decisions. So if that's something that would interest you, then definitely get involved.
The tips and stuff are like a guide and definitely to a degree I follow along, but the analysis that you're able to go and do and you're like your own, like continuously invest, no brainer.
Exactly. Alrighty, well, funnily enough, we've spoken about Gary, we've spoken about Jerome, and, I'm just turning the pages on my notes here, and we've gotten to the great SBF. So we've got the trio of kings in today's podcast.
Jesus, he popped his head out of his cell.
But obviously, I think we did touch on it maybe briefly last week, but FTX, obviously, as you guys know, is the inactive centralized exchange that crashed pretty much and put in our bottom of the market.
Did it crash? Wow.
Over leveraging themselves and using customer funds and got absolutely run on. But they are pretty much focusing on not resuming their exchange operations as a lot of people once thought. But they're going to look to fully reimburse clients. Now, the catch here is that I believe they're reimbursing clients based on the date they crashed or just prior. I think this was 18k Bitcoin. We crashed to 15k after and then bounced, but bit of a joke really, but it's better than nothing, I think. Beggars can't be choosers. I think, in a lot of hacks and a lot of different, crashes that happen in crypto, people get nothing back. So
look, it's good. It's promising that that's at minimum happening.
Yeah.
Do you know what I mean? Like a lot of people in Celsius got burned for nothing. Yeah. So at least as much as, it's a little dog.
Yeah.
Booma Bear.
Where is that phone coming back? Sorry, everyone. Where is that coming from? Okay, sorry about that. I think we'll just continue. I think Will's phone was ringing somewhere and somehow made it onto the podcast recording.
Will Bear, answer your phone, mate.
Yeah, Will Bear, I think your phone's ringing. Anyways, we'll move on. I'm not sure what happened there, but quickly, some of you might have seen that GoDaddy, the big Web 2 registry domain company, partnered with ENS, which is Ethereum name service. So really what's happened here is it's really allowed the Web 3 community to now link their ETH names, which is their domains, to traditional Web 2 domains at no extra cost, which is really cool. So I think the way GoDaddy have done this is they've implemented their own blockchain technology through smart contracts, which is awesome because anything that bridges Web 2 to Web 3 is sick. So,
especially when you look at it, like GoDaddy's a relatively big company worldwide. Yeah. So that also opens up their current client base.
Yeah.
So the interoperability between them is pretty big for the next few years. So it's a pretty good drive. Yeah.
Yeah. Quickly, another one that probably some people saw was the pro-Bitcoin Salvadoran President Nayib Bukele. I actually don't know how to pronounce his name.
That's actually pretty good.
Was it?
Yeah, wasn't bad, yeah.
Nayib Bukele.
I like it. Second, I think the second one.
Let's roll with it.
Yeah.
So he's widely expected to win. I think he came out himself before the media or anyone came out and said, I've won. True
I don't
South
think he'd
American
go against
fashion.
him.
Yeah. It's suspected that he has 87% of the votes.
Arriba.
So, he pretty much
dominated.
So we'll probably be seeing El Salvador fly the Bitcoin flag much higher for much longer, which is good to see. And then lastly, really good week for crypto inflows into digital assets. So the global digital assets under management reached 53 billion in the week. The gains were largely due to investments in Bitcoin, according to alternative asset manager CoinShares. So just for the week, there was 708 million inflows, which is really good because I think in prior weeks there had been slight outflows, given the ETF and the market kind of trending downwards. So really good stuff to see. I think the ETFs came to 8.2 billion, which was down from 10.6 the previous week. But obviously, as time passes, there'll be a bit less action given how hot it was at the start.
And as well, like those floodgates opening they're also not. It's not just a gate that just never shuts.
Yeah.
So they're going to be buying strategically as well.
Yeah.
So
and like it's you know, like so for instance, like in Grayscale have outflowed $1 billion BTC, but BlackRock and Fidelity together have put 1.6 billion, I think, at the very same in the same week type of deal. So it always kind of balances out. But that'll be it for the fundamental info. We'll briefly, after Wilbur Bear gets off the phone. No, I'm joking. We'll move on to the technical analysis part. There really isn't much to update you guys on since last Thursday. There's been much chop in the market. I think I made a reference before that I think if the market was to continue to chop sideways towards the halving, there could be a few people that turn mentally insane.
Yeah, look, I might be in that basket.
Yeah, I think I would too. Probably early onset schizophrenia or something.
It's like the halving's meant to come through, I think it was like 4 or 5 days after my birthday.
Right.
And that would probably ruin my birthday.
Yeah, I think it would too.
So I really hope I'm celebrating.
Yeah. I really hope you are as well.
Yeah.
But in saying that, there's been some really good alt movements throughout the market. I think Sol's come under 100, but the big one is Link, Chainlink, which is now almost touched $20. I think got to 19.8.
Yeah, that was,
which was, it approached pretty much a monthly high in its major golden pocket from a pivot. Rejected for now. Our day traders are short, wink, wink. But in saying that, this is a hedge strategy that we employ in the day trading course. It gets taught because the reason why we are short on Link is because many of us are Trading Academy members. Many of us as Trading Academy members, those bettors out there, anyone listening, is we have 10 units on Chainlink for an average buy of $5.80. So
I'm pretty happy.
It's almost $20, so that's almost, let's just call it an even 3x, 4x that we have on our spot bag. So what we like to do at different points of resistance when there's a lot of uneasiness in the market is hedge short. So in case of, rather than having to acutely sell off our spot bags and risk selling some Chainlink and it breaking out further, we prefer to get on futures and hedge short, which sounds a bit complicated, but once you learn it, once you understand it, really good strategy. And a lot of us over at the day trading employing that now. We had a good RNDR scalp this morning that a lot of us were on. And really, I feel like the Discord's heating up a bit, don't you reckon?
Mate, there's more and more people coming in, which like, this market, crypto, like looking at Google Trends over the last 2 years, crypto's at its highest point. So yeah, people are starting to flood, and that's usually a pretty good sign as to what's coming. Usually when the fire starts to flame a bit more, but you need to buckle in.
I think, once we get above that 50, 60K mark, you guys will be, if this is your first cycle and you've never been at the top of the market, strap in, because when retail come, the retail isn't here yet, trust me. When they come, you'll know. You'll be seeing not dog with hat going to 200 mil, you'll see dog with pump water bottle and t-shirt on and cape out the back at 500 mil market cap, and you'll be wondering, what the hell is this?
I have a really interesting thing that came to my mind actually the other day, like just walking around. Yeah. Paris Olympics.
Oh yeah.
Middle of the year.
True.
How many ETF ads you reckon are going to be absolutely slammed into that?
That could be.
You know what I mean? That's a 2-week Super Bowl.
Actually, yeah. Let's wait and see till Monday to see if there's an ETF ad at the Super Bowl.
Oh, yeah, 100% there will be.
You reckon?
Oh, $50 on it.
Yeah. No. That's a bad bet for me. BlackRock's got the cash to spend on a fucking Super Bowl ad.
Do you know what I mean? So, like, I think that's going to be like the next wave is once you start seeing that, bull's gone.
Yeah. Agree.
You've seen red, it's bolted.
Yeah.
So, that's going to be 2 months after halving.
Yeah.
Woo-hoo! Hold your horses.
Hold your horses. But let's re-speak about that next Tuesday, the Super Bowl ad. And I think it's, it's funny. I don't want to go out on a limb here, but I want to say that the last Super Bowl in the start of 2022, so remember that, this is only a month to 2 months after the top of the market. Pretty sure they were Bored Ape Yacht Club ads.
Yeah, it was Bowl. Actually. It was too. Yeah,
I think so. So if they can afford it, BlackRock can and Fidelity can. But just on the market at the moment, we chop and change. I did send our Trading Academy members and our Day Trading Academy and course members Fractal before that talks about an important support level under us that could be hit unexpectedly. That's happened in the kind of prior impulse moves that I'll include in the update in the written chronicle if you want to take a look at it. It's a bit of a cool fractal just to look at and be best aware of in case you are looking to accumulate or dollar cost average across the next 2 months towards the halving. It's just a plan you can derive. So moving on, the market's doing okay at the moment. The minor market.
Yeah, doing pretty good. I think the biggest thing, like not much has changed since last we spoke. The only big news that's sort of come out that I guess directly affects us and obviously our members or clients is that we have a new facility.
Yes, tell us.
A little bit exciting. It's still young. Obviously, we're still building it out, but we've got the same company that we're dealing with in EU, but they've started up something in Thailand that's all a really, really above board setup. Oxygen suppression systems and all the stuff is what we've got in EU as well. So really good fit out, all that sort of stuff. So it means that there's, no humidity risks or anything like that.
Yep.
0.075 US cents. So it works out to about 11 cents AED. So it's the cheapest we've been able to offer to anyone. We're not opening the floodgates, and that's mainly because this is a brand new facility and it doesn't allow a huge amount at 1 minute. And so we're slowly doing lots of 50 to 100. Current clients can't move their machines there because it doesn't allow with PDU requirements because they're new PDUs on new machines and specifically built for that. So it's only S19Ks, T21s, S21s. So we do have a select amount for T21s. All right. There are minimum order quantity of 5. So reach out. They're going to go really, really quick. So if it's of interest, they're really cool. 190 terahash. Some of the lowest wattage per terahash we've ever seen. I'm doing really good deals for clients because we want to make sure people are set for the halving and obviously future bound. So reach out. We're happy to help everyone out. But otherwise, S19K is still obviously one of the best machines out there at the moment. As much as a T or an S21 is good, they are a lot more expensive. So best bang for buck is still the S19Ks, and we do have those in Europe. And so 24 hours we've done one online. So pretty cool aspect of that one.
Yeah.
But beyond that, alt markets are actually very much exactly the same. I actually looked at them earlier before I came in and they're the same. So there's nothing update on that. They're all still ticking away. Everything's pretty stable in the last 5 days.
Yeah. Sweet. All right.
Love it.
Well, that was a solid, what are we at? 22 minutes, usually 25 to 30. So we actually got through a bit there. But firstly, apologies about Wilbur Bear's phone going off to anyone that gets had a bit of a shock throughout about that.
How about this? Anyone that goes into our Discord and types in Wilbur Bear, I will give them something.
I'll say this right now. I'll send the first person that listens to this and gets all the way to the very end and sends Wilbur Bear and tags Mitchell CRO in the Discord. I'll send you 20 USDT.
Whoa!
Yeah. You can use that to trade.
Fabulous. I'm just
so let's wait and see let's see how many people listen in.
Yeah, I like it.
All righty, guys. Thank you very much,
guys.
and
Speak
we'll
soon.
see you next week. Thanks.